April, month end. Growth picture, not looking as good as we had expected. Inflation continues to rise. Those factors are keeping this market very choppy. Lots to talk about. Sit back. Let's go. Hello, this is Michael Loftus with Wealth and Wisdom TV, where education is the key to a successful financial future. First time here, I'm a practicing financial advisor, actually a registered investment advisory firm. So what we talk about here, we do apply, but please, this is not considered advice. So in the opening, we talked about what's going on. When we look at our models, we're looking at growth, we're looking at inflation, and things are starting to change here as far as the overall market. Now, we've not broken down as of yet, but we are seeing some cracks. So let's get over to the big board. Kicking things off, if this is your first time here, we focus on investments and our process in this video. But of course, we are a full service firm. We have lots of videos, educational videos, that you can check out on our channel. So on our process, there are several different steps to help us make the best decision. So we start off with macro, and macro is macroeconomics, a lot of different information, and we look at growth, inflation, and policy. Okay, now a month ago when I did this video, we're looking at a cycle 2, growth accelerates, but inflation accelerates. Think of 2021. The problem is growth is not really accelerating as much as we thought, but inflation is more of a cycle 3, which is a stagflation. That's not really a great cycle to be in. So let's just dive in a little bit here. So the first thing is last week, we got GDP, which really came in less than expected, about 1.4%. Okay, so you've got that. Earnings so far have not been great. Expectations were 8.5%. We're running about 3.4%. So again, we're not seeing that surge in growth. Now the big picture is inflation. We saw CPI a few weeks ago. PCE is the Fed's tool that they utilized, and that also is starting to move up again. So that's not a good thing. So what happened yesterday, we had the ECI, Employment Cost Index. That too went up, which was part of the reason why we saw that sell-off yesterday. So across all facets, we're seeing this inflation surging. We're also seeing it in earnings, right? You can look at last night, Starbucks took a big hit. Traffic down 7%. People aren't going to spend the money like they used to. Now, even the lower end consumer at McDonald's, same thing. Traffic down, okay, and earnings are down. And that's a byproduct of high prices, okay? So we've got growth, we've got inflation, which does not look good. In fact, we expect it to continue to accelerate in the second half of the year. And then you've got policy, okay? Now, there's different parts here. Normally, it would be the Fed, but it's as much the Treasury now. I've shown this chart quite a few times. It's called the Financial Conditions Index. The lower it goes, the looser financial conditions are. And this has been driven by the Treasury, which is Janet Yellen, okay, pumping liquidity into the market. So now, Monday, and then this morning we got what's called QRA. Basically, what is the Treasury going to do going forward with issuance of bonds, which is creating that liquidity? Came in a little bit more hawkish than we thought, okay, and our firms that we work with as well. So one, you've got tax receipts that came in. We'll see how things go as we move forward, but definitively not as dovish, which would have been bullish, than we had anticipated. So next up, let's take a look at those charts. So starting out with the charts, I'm going to look at a couple different time frames, right? We look at trade, 3 weeks or less, so daily charts, and trend, 3 months or less, okay? And we'll see that as we look at, in this case, the weekly chart. So right now, we're still in an uptrend, and you can see it moving here, okay, despite what happened in yesterday's close. Now, are there any things that are concerning, okay? You know, we've had a little bit of a crossover here. That's a momentum charge right there, full stochastic, but we're not really that far down on the trend. And again, we still see that trend to the upside as of today, okay, May the 1st, and we'll see what happens as we go forward. So then we'll look at the daily chart. It's going to paint a little bit different. So here, when we're looking at the daily chart, we have seen a breakdown. So we've seen a breakdown on the trade, 3 weeks or less, and we could define that in a couple different ways. Okay, first off, right now we're below both the 20 and 50-day moving averages of price. Okay, so this, again, if you're new, technical analysis here, we're looking at the charts. What else do we see here that could be concerning or helpful? Okay, first off, at the top we have is called relative strength. Now, up here we got up. We showed oversold conditions. We started moving up, and then we failed at the 50 number, which is what you're looking for. You're looking to go above to confirm that move to the upside. Didn't get that with yesterday's move, not surprising. Let's see where it goes. From there, we've got full stochastic again, momentum. We did get a positive move to the upside as we saw oversold conditions, and we were adding some equities at that point. But same thing, it's kind of tailed off there. Let's see what happens if we get confirmation. Now, the last thing right here is going to be the volatility index. So I'm looking at price volume volatility. And when you look at volatility, it still hasn't done much. I mean, we did jump up in the 20s last week, but the reality is we're just above 15 and change. So below 15 is a green light. 15 to 20, that's a choppy place to be. You got to be careful. Above 20, we're starting to sell equities and be more conservative. So overall, that chart is not looking terrible. So let's look at some of our overall signals, momentum signals that I do track. I'll show a couple quick ones. This is the McKellen oscillator. It's a momentum indicator. Obviously, the green is positive when you're above zero. So I said this last video, it's been all over the place. When we were in the uptrend, it was green. We did see that. And so far this year, we really have been up and down, up and down, up and down. So went back to negative yesterday. So a very noisy signal right now, but a lot of them are. And I'll show that at the end of our presentation. The next thing you really look for is what's the market breadth in the overall market. Okay, so here I have the NYSE in blue, so the whole market, and I have new highs minus new lows, right? And you want to see surges. When the market was surging back in 2021, you could see big time surges in new highs versus new lows. Now, we did start seeing that in this area here, but then it stopped, okay? And that's not surprising based on what's going on right now. So not a lot of oomph right there. I'm going to go back and show another chart real quick. Let's see if I can pull it up. Here it is right here. So this shows you the components of the S&P. So you've got 11 different sectors within the S&P. And the S&P has been driven by what? The Magnificent Seven. Now it's like the Magnificent Three, which will be Google, okay, Amazon, and NVIDIA for now. Let's see what happens with earnings. I have this set up where the strongest sectors are on the top. You've got utility staples, so defensive sectors, okay? And then you go across to what's down the bottom, and not surprising. So when you look at some of these charts, they're all in downtrend. So that's why the over market's in a downtrend, because you're not seeing everybody participate. Let's go a little bit deeper on that with Sector Spotlight. Sector Spotlight, I always like to start off with the 10-year Treasury. Kind of gives you a good idea. You always say the bond market's smarter than the overall market. So what's the trend right now? We talked about this in our last video. Obviously, the trend is to the upside. So yields up, price down. One of the reasons why we don't own bonds right now. So what's going on with bonds and why are we going up? The 2-year just went above 5 again. So it's telling us what the Fed should do. So you've got two factors. Inflation is number one, which is going to drive this higher. And number two is all this deficit number. So we continue to see some higher lows, okay, which is why we're going up. We're kind of stuck in that 4.6 range. Still think we could move higher on this as we go forward. We'll see, but at this point, duration bonds are not really good for your portfolio. Like I said, we don't own them right now because when it goes up like this and prices go down, you surely don't want to own these bond sectors. So next up, let's go ahead and talk about China. It can be a controversial subject, but the bottom line is not only are they coming out of their recession, okay, but you have the government that's really trying to stimulate the overall economy. So if you scroll down here, we are seeing, and right, we bottomed out and we've seen a nice move to the upside. Now, yesterday with the market, it sold off. Another charting system I utilize would say that it was at the top end of its range. So it's not surprising. We had a little bit of a pull down yesterday. It is green today, but we hope to see the next breakout. Not a big holding. We hold large cap growth and tech here, but we do feel that going forward, this is a good sector to own. Now, of course, that depends on the overall markets as we move forward, okay? So when you talk about inflation, we want to own it, right? And there's a lot of different ways to own different inflation assets, okay? This is XLE, which is the energy companies. You could have master limited partnerships. There's commodity funds. There's a lot of different ways to own inflation assets. So if inflation is going to continue to rise, okay, and going back to China, as they expand, their demand for oil is going to go up. Okay, that's why that's one of the sectors that we're in. So when we're looking what's happened here, okay, we had a move to the downside yesterday, like everything else. Okay, this is your 50-day moving average. Let's see. At this point, I see this might be a buying opportunity. Now, I added something the other day. Unfortunately, we had to turn back yesterday. So want to see what happens with this move before adding, but this is one of our biggest holdings right now, meaning inflation assets, and there's several that we do own at present, okay? So next up, I'm going to wrap up. Talked about this for quite some time. India continues to grow. GDP, low unemployment, you name it, right? They are just growing, and you can see that with this overall move to the upside. We are again at all-time highs. So again, when you get there, not the time to buy. You want to see a pullback for an entry or to add to that. But going forward, India is still a place that we do like. So next up, let's talk about options. So next piece of our process is options. I'm not going to get too deep here because there's a lot to it. The firm we use, Tier 1 Alpha, for research. I get 20 to 25 slides a day with all kinds of commentary. But the bottom line is the options market has gotten so big, it has, and it will move the market. So you need to be aware of what's going on. And the first thing you look for is what's called gamma, positive or negative, okay? Gamma exposure acts as a throttle for equity volatility. Volatility itself acts as a toggle for equity exposure. So we are very much negative gamma, have been since April the 2nd. Okay, so what happens when you're negative gamma, selling begets selling. So another thing you look for is called realized volatility. I have 1 month in blue, 3 month in orange. Okay, when 1 month goes above, that's another signal that we get where we have to be cautious as far as what's going on. And the last thing is you can see it with the activity, okay? So this shows the notional flows volume, okay? And when the markets are moving up, it's moving up. So we peaked and we have really started since April, the flows to push the market have gone down. So that's where we see the impact with options. Next up, let's do a couple macro call out. So we're not going to do a lot here today. Actually, we're getting a lot of data, ISM data, manufacturing, but didn't get it before the video. So I think a couple things that when you look at when growth is starting to accelerate a little bit, this shows capital goods. It did bottom. It's coming up a little bit, but a little bit. It's not a lot, okay? Same could be said for durable goods, ISM activity, but again, going to get some more details this morning. And the next thing is, this came in yesterday, kind of surprising. Consumer confidence has actually gone down again. Two factors: price of gas, price of groceries. Okay, so not surprising, going back to our theme as far as what's happening with inflation. Let's wrap this up with game plan going forward. Wrapping things up here, these are all the various signals that I do track. Okay, as you see, most of them are negative at this point. So very choppy. I still feel like I said, this is a correction within an uptrend. As of today, that's where we see things. We're really between cycle 2 and cycle 3. That's going to determine. The inflation assets are going to stay the same. That I have been building in our portfolio, but we have to be careful. Now, cautiously optimistic, maybe not as much, okay? Speaking with a client yesterday, a couple weeks ago, yeah, today, more cautious than optimistic. Let's see what happens. You've heard the term, sell in May, go away. Let's see if this weakness continues. But best way to stay up to date, make sure you subscribe or check us out on all our various social media platforms. Thanks for watching. Michael Loftus, Wealth and Wisdom TV.